Okay, guys, good morning. Here begins the series of The Gentle Trader. The first thing we're going to be talking about, because I'm going through with the advanced concepts. If you have no knowledge of trading at all or Forex, that is something that will be done in my free mentorship coming up soon. I will take you through the whole introductory areas and beginnings of Forex. But as for those who have knowledge and awareness of the basics, ground basics of what trading is, either Forex, indices, volatilities, futures market, commodities, and the likes. For those who are already aware about this is an advanced teaching, an advanced guide into how I look at the market, how I trade, and how you can learn one or two things from it. Credits go to my main people that I consider as mentors. People like Arumeli Zilla, people like Romeo PT. I've learned so much from those people. So let's dive into the video. We have key levels. Now, if you're looking at this end of the chart, you can see there's the high, lows, high, lows, high, lows. And one of those highs in the zigzag drawing has a key level mark on it, right? You can see this key level marker here, this guy. This is the zigzag movement. This is the zigzag movement, and you can see this key level marked out up here. Now, this is an indication of where you can identify key levels. You can see it up there at contour areas. Some key levels exist in between here. I will explain it. In between the movements, some key levels can exist at the base as support and resistance levels. That's also people call it. Now, at these tops up here, these tops and bottoms, at these tops up here, and these bottoms here, or this bottom here, or this top here, this top, this bottom, this top, this bottom, they are indicated by, obviously, candlestick charts, of which we use candlestick charts a lot. Usually almost every trader that trades in the retail space use candlestick charts. So this is an illustration of a bearish indication where you have a high in the market. You have this guy, this contour key level. This is the exact representation of this top up here. This top up here. That's what we're showing here. This is how the key levels exist on a flat close of the candles, the open close areas of the candles. And for this bottom here, where you have this guy translated to this bottom ranges here, that's here. We have this kind of beast sitting there, key levels. And for the one I spoke about, because I don't want this video to not be too long, I want it to be brief, step by step, so you can always pick the concept, you can watch it, you can ask questions in the comment section. Then for the one that I spoke about having to be in the middle, in the center, when you can see two subsequent candles, let me draw it quickly for you guys, so you can just see what I mean. You can see two subsequent candles moving in the same direction, right? You have a candle here, you have a candle here. Something like this. Yeah, see two subsequent candles moving in the same direction. The open close is the same factor, the same way we mark out our open close, is the same way I'm marking out this one. This is the wick that exists there. This is the wick that exists there. Then for the key level, you can have a nice key level. This is it here. In between, two candles that go in the same direction. Can you see? We have a key level in there, right? So let me just clone this. Place that there. I'll show you guys this on the live chart right now, right? So these are the different scenarios where we have key levels in terms of this is the chart moving. You're seeing the up, you can see an A level key level. You can call this an A because this is like a top, an A top like this, right? This is like a V bottom like this. This is the bottom here, a V bottom here. Then this one is like in between two candles moving in the same direction. So these are only kind of key levels you can ever identify in the market. based on the narrative of how we trade and approach the market. So now, without further ado, I'll go into the charts, show you a few examples. I'll screenshot this, drop it in the community tab so that it can always be there for those who want to make reference to it. Okay, that has been saved. Now let's go into the chart and look at some of these key levels. So now we're inside the chart. I would happily use a color maybe you guys can relate to, the red and the black. Let me switch this guy to a black color. Great. So now, looking at this chart, based off what I showed you guys, I told you if you look at this guy, he's going up and going down. I like to use the 4-hourly time frames to identify potential key levels that can exist. Now, if you look at this here, I'll show you the illustration I just showed you guys. In this range, just this small range, I'm going to show you all the key levels I just marked out. We have this top, which was the first one, the A top. We have the V bottom that is currently forming, a V bottom that's like this. This low, these guys here, these two candles here, as well are V bottoms. These two red and black and red candles, V bottoms, A top, V bottoms. Then all these candles that move in the same direction, between this black and black moving in the same direction, in between them are the continuation key levels. Can you see them? Continuation key levels. Can you see them? Now, that's how it is on your chart, and it's everywhere. It's everywhere. Here, continuation key levels. Boom. This is a V bottom. A V bottom the market traded through. A V bottom that was created, traded through, an A top. An A top. See a V bottom here. This was a V bottom that pushed price up here. Then eventually closed below. And you can see the market came back to that V bottom and tapped it and sold off. So these key levels more or less stand as areas of true support and resistance, areas of which market tends to interact from them, break through them, retest them, sell off. Sometimes it doesn't retest, it can go, but whenever market is retesting them, it builds strong confidence to taking a position and finding a way to get in on the trade and capitalize as much as you want to capitalize. Just like if you check in the short earlier that was posted, there was a trade on USD JPY that was posted there based off this key level, continuation key level, market tapping into it, and we found a 1-hour CRT off the open in London session, and we were able to get a clean short position on USD JPY. So I hope that wraps up a clear understanding of what key levels are. Based on what I just taught, you can go into your charts, practice this over and over and over again, and try to make sense of it. Look at how price reacts of it, when it breaks through it, when it comes to it in the future, and build up your own understanding of it. And hopefully you can be able to learn one or two things. So this is episode 1, and I'll see you in the next. Take care and farewell. Oh, by the way, do like and subscribe if you found this very useful.